your host, Efi Pylarinou, and today I have the pleasure to reconnect with Shaul David. He doesn't need an introduction for the fintech community, but for those that are broader listeners, Shaul has been in fintech from the very early days. I remember meeting you, Shaul, in Switzerland when you were one of the first, I would say, fintech advisors to the UK government when they first started, a very coordinated effort to grow the fintech ecosystem in the UK, and you were spearheading these exchanges between Switzerland and the UK. Then you were instrumental at Rails Bank. And I would say, when I think of you today, you are one of the fintech advisors very much focused on embedded finance. Let me welcome you, and thank you for making the time to be with us.
Thank you for inviting me, Efi. It's great to reconnect, and I look forward for conversations and hopefully some insights.
Yeah. I mean, I think there's, even though the industry has grown, has matured, there's always new, hot, trendy topics that people misuse the terms, just because they're hot. And I think embedded finance, embedded fintech, if we want to make the differentiation, is one of those. And I want to start with asking you, do you agree that it's kind of a myopic view when we think of embedded finance just as another outsourcing, plug and play approach to financial services?
Yes, I think there's a lot of misunderstanding and maybe outdated views of what that new technology and processes can mean for customers. And I really don't like to use the term white labeling or outsourcing, because I think it misses the point. True embedded finance isn't about slapping one's brand over a banking product and maybe sharing some revenue. It's really about greater integration between the service provider, the banking service provider, and the customer on data and processes and compliance and everything in between, in order to really create something completely new and relevant for the customer. And I think that's the point that it differentiate true embedded finance from co-branded cards or other types of white label. It's irrelevant. It's for a particular use case. And I think we're going into a world where we're going to find a lot of those different use cases in different verticals using banking as a service in different ways.
It's interesting because I just saw this morning Jason Mikula tweeted about the fact that the Stripe Treasury, which was, I remember so many articles, we all jumped on to this huge offering. It was 3 years ago, probably, maybe 2, something like that. And only to realize that today nothing has really happened with that offering, although it started with a vengeance with, Shopify adopting it and others, but it's really been anemic. So in that vein, that's a good example of it didn't really happen. Why didn't it happen? What's the difficulty there? And do businesses that are non-financial businesses like Shopify or other retailers in whatever business, do they understand what to do with embedded finance? What's the opportunity?
I think we're just scratching the surface. In honesty, we spend, and obviously at Rails Bank, but a lot of our competitors in the UK and US spend 5-6 years educating the market about embedded finance. and the APIs and all that. But I don't think we've reached the real economy at scale just yet. And obviously there aren't many examples out there of true embedded finance implementation in what you would call a real economy or a non-finance environment. Do they understand? I think they're beginning to understand, and think where we probably miss the point a bit is an over-reliance on APIs. And everybody wanted to be like Stripe, and Stripe are very good with their APIs, and they're really making the use of the API extremely, extremely easy. And they're probably the gold standard at that. But having said that, if you compare the APIs to Lego bricks, which I've used a lot, and others have used, and it's a great analogy. Those APIs or financial building blocks come in a large variety of sizes and shapes and colors. If you know what you're doing, then you can take those and create a Millennium Falcon. But for most businesses who are not financial experts, a manual is needed. And I think where we lack is in building those manuals, and we're, I think, getting there, and creating different manuals for different sectors that solve specific problems or look like a different model. And the Millennium Falcon Lego looks very different to 007 Aston Martin DB5 Lego, yet they're built out of the same Lego blocks. I think we have more to do in order to bring it to non-financial brands, and specifically for Goldman. They seem to be having a lot of struggles with some of their partnerships, and obviously I'm not being inside. I don't know exactly what those are, but I think, to me, it's pinpointing the fact that you can't really get into embedded finance just because you're a bank, or just because you have a lot of smart people, and Goldman has a lot of smart people, because you need to create the whole structure to deliver it. And it's not just technology, it's compliance, it's the sales process, it's the support afterwards, and it's understanding the different relationships and responsibilities. And for somebody like Goldman Sachs, or used to be an alpha company, in any interaction that they have, I think playing second fiddle to an Apple or a Stripe is probably something they struggle with a bit.
Being a service provider, B2B service provider, that means,
yeah, they're used to being number one in many league tables, or the top two. They have a very high view of themselves, rightfully or not, but that's kind of anybody who worked with Goldman Sachs before knows what I mean. So I think that clash of it's about us versus Apple saying no, this is our card, and we call the shots, as well as Stripe, a very, very, very large player that knows exactly what they want to do. I think those partnerships have not been managed very successfully.
And is it right to assume that the market doesn't realize that the legacy bottlenecks that exist from the BaaS providers, be it Goldman or somebody else, are going to be sort of you're going to inherit them if you are the customer, and maybe you're not familiar, you're not even aware of those bottlenecks and frictions. So would it be safe to say that it's better to use a fintech, a cloud native fintech, rather than an incumbent, just because they don't have that legacy? So if you were to choose an embedded banking finance provider, you're better off with the fintechs, or not really?
I don't think so. I don't think there's a, first of all, there's not going to be a one size fits all, and the range of potential customers outside of finance, the size of them, the complexity of their model, their existing model, and how finance could help, probably means that there will be different kind of banks and providers fitting with different segments of the market. What I wouldn't say is that an incumbent with legacy technology can't do that, because I think, again, it's not really about the tech, and you can put layers on top of relatively old systems, and it has been done before. So the tech is solvable. What is not solvable is a provider whose focus is elsewhere, and I think that's where incumbents are going to be struggling, is where they have a focus on their existing B2B, B2C retail markets, wherever they get most of their revenue from. Whatever that is, it will conceptually be in contest with the banking as a service side of the business. Is how do you marry those two organizations together? How do you manage running two organizations where the operating model is very, very different? One is direct to the end customer, and you have a relationship with that direct customer, and your compliance is built in that way, and all the other processes, support, everything else is built that way. Whereas there's another model where an intermediary is distributing your products in a way that is specific to them, and you as the service provider is one step removed from the end customer and everything that it means in terms of the day-to-day interaction. Again, like I said, the compliance responsibilities, the ongoing data processing and ownership between customers, and between the customer and the bank, and who gets to continue to build that interaction with the customer on an ongoing basis. I think that's very, very different, and unless you have a very, very solid management team, it's challenging to run both, regardless of the tech.
Now that I hear you, Shaul, and I hadn't thought of this before, most of the use cases of embedded finance in non-financial businesses that we've seen up to now are frequent low volume payments, or I'm thinking of mobility use cases, right? The Ubers, the Lyfts of the world, or other car companies that are embedding payments. Those are frequent low volume, or rather the big ones, I think, in e-commerce too. So that requires to be set up from fraud, compliance, everything, right? It's not evident how to process that. You insist that they're not one size fits all in terms of the embedded finance offering. And in your mind, is it these different industries that will need specialized providers because they understand the industry, or is it about the technology? How do you have it in your mind, and what industries do you think are some examples to focus on?
Yeah, well, I think I would split it in two ways. One is industry verticals, and what used to be an art in banking is understanding your customer and understanding the business. And when 200 years ago a merchant went into their bank manager, that bank manager had an intimate knowledge of that business and was able to offer advice and support. Today, that really isn't happening anymore in banking, and we lost that as a banking industry. I think we lost a little bit of that connection and deep knowledge of different industries. So, and in embedded finance, as providers develop a deep understanding of verticals, I expect there will emerge so-called vertical winners as far as embedded finance's perspective, that would nail a use case for that industry, and would probably expand that to the most of the players in that vertical. So I think that's one thing where not one size fits all. You have to have that knowledge, and the market's just too big for. It's not going to be a winner takes all. The other dimension is the size of the customer, and really that's where balance sheets come to play. And what we're seeing so far is obviously the very beginning of embedded finance. And it's the very simple products of payments and accounts and debit cards. There's very little in terms of truly embedded lending that comes with the rest of the package, because it's very, very difficult. That's one. And then it's not only difficult, it requires scale to succeed. And I think, from an Apple perspective, there are only a small number of banks that are going to be able to support demand for Apple credit card, and this is probably where incumbents are still going to win for the foreseeable future because of their relationship, because of the size of their balance sheet. But the second tier, third tier, fourth tier of customers in terms of their size and complexity will need possibly more nimbler providers. The importance of or the scale of the balance sheet behind that provider may not be as critical, or I guess some provider will create a panel of balance sheet providers to support one or more use cases. So I think there's different ways of skinning that cat, and we'll see what wins in different sectors.
So it seems to me that you do have on your radar the big tech companies, the Apples and the Amazons, or not?
Absolutely, and I don't think they're going to come in as providers. I think they're going to come in as customers. And they don't need to be banks. There's no reason for them to bring the SEC and have them look at their books. Nobody wants that if they don't have to. But they have a huge demand, clearly.
But Amazon on their marketplace, they've been offering loans and credit products for a while with different providers, from what I understand, right? Yeah. They're not married to anybody exclusively, but it doesn't seem to have scaled successfully.
Yeah. It's an interesting one. I think they started with their own sort of balance sheet support, and they're doing relatively little. I imagine they're still in the experimentation phase. But if I think 2 years in advance now, and precisely on Amazon, I think they are going to see or continue to experiment with what they can do with data. That's what they do best. They can analyze. They collect data on merchants. They know merchants better than any bank has ever known any merchant in the history of banking. Right. And I expect them at some point to even develop their own underwriting, modeling, and basically sell those opportunities to the highest or lowest bidders. What I mean is, if you're a merchant on Amazon, they know before you do that you're going to need some amount of working capital in the month of June, because they know the behavior of your inventory and of consumers and everything else, and they'll be able to offer that opportunity of, say, 10K for a merchant with different characteristics to a panel of providers that would bid for that, which is going to be good for everyone. So I think that's where I expect them to go.
Yeah, but I would call that more open finance in my mind rather than embedded finance. And
well, but it's kind of the same thing. So Amazon is the provider of embedded finance to its merchants, right? That is very, very clear. And all we're talking about now is whether for that particular model, one bank can provide the whole set of needs, or as in the case of Amazon, it's just too big for and too diverse for a single
provider.
For a single provider, right? Across geographies, across sectors, across everything. So yeah, there is no bank in the world that would take it on itself on single-handedly.
Yeah, so really any marketplace like the Amazon marketplace, and there's others, there's Shopify, there's others marketplaces, that's where we could see a successful implementation of embedded finance with multiple providers, is what you're saying, because of this.
For the big, yeah, for the big ones. But there are lots of marketplaces for various sectors that are really, really successful in terms of ownership of their sort of realm, but they're not as the size of Amazon. And that's where sort of I've been spending the last 6 months, is trying to understand different sectors and where those marketplaces are in shipping, in music. You can think of Amazon as such, for example, and not Amazon, Spotify, as a marketplace, and they're building their creator side of the business. So how that would work, yeah, it's depending on size. The other type of customer that I'm really looking, sort of trying to get a better understanding of, is the vertical SaaS, and they're not marketplaces, but obviously they have a really high engagement with their customers. Their customers run their business on those vertical SaaS or different parts of that value chain, and there are a lot of opportunities to help those companies deliver more value to the customers, higher engagement, and potentially revenue streams. So
what's an example of that, Shaul?
There's a couple of examples, and I'm going to take those examples from my friend Lars Markel, who's got an excellent newsletter, Embedded Finance Review, and I think it was last week or 2 weeks ago. It was one example there, a company called Moxie, and they help people build medical spas.
Okay.
Right? So everything you need for a medical spa. How do you get the equipment, the resourcing, and everything else, and the obvious extension of that is taking payments, and beyond that, some loans to start up a business. That's one. There's Toast in the US, in the restaurant market. Again, inventory, personnel, and everything in between.
Yeah,
and that creates a high level of engagement for Toast with those restaurant owners, and again, it's about understanding the needs of the customer. Yeah. Finance is not a product on its own. It's always connected to a goal. The question for banks now is, how do I find the customer when the need arises? Because historically, when a customer, when the restaurant owner came to their bank manager, that was after the need has risen, and potentially between walking from the restaurant to the branch, there was an opportunity for someone else to provide a service for that restaurant owner. And I think what embedded finance does, or trying to do, is bring that finance provider as close as possible to the point of need, so that the value can be provided there in order to complete the user job to be done,
and help even before the actual business owner gets to the point where there's a problem and they need to walk sort of speak figuratively to the bank
Yeah,
to solve that
yeah, yeah.
problem. So
Because by the time somebody that has a need, in these days they go out and look for comparison sites or other intermediaries. If you're a bank and you have a relationship with a certain customer, there is a high chance of them not even speaking to you at all because they found something else. And the real question here is, how do you as a bank solve the problem of digital error distribution?
so
That's what
is
embedded
it,
finance.
yeah, is that in your mind, to wrap it up, if you were to say what the innovation or the potential here to deploy this is it innovating at the distribution layer?
Yes, completely. How in a world of complete information, how do you as a bank differentiate? The old model of universal banking and having 100 or 200 type products to solve
Push, to push.
any need, right? For your customers is no longer valid because you're not going to be the best in everything, and you're simply going to lose in all the products that you're not at the top 2-3, or where you don't have engagement, a serious engagement with the customer. For example, say with large corporates, they have an intricate relationship with their banks, and for their complex needs, they would still go to their bank first and foremost. But for everybody else, and I think we're seeing encroachment of embedded finance into more and more complex products as we go along. You have to be very good at what you do. Otherwise, you can't rely on the engagement that you have.
Interesting. So again, we're talking about increasing complexity that on the one hand is an opportunity for those that are good in what they're doing to really offer value to their customers. And this is not an easy copy and paste technology that we've experienced, with many phases in finance up to now.
Yeah. I think banks have traditionally a lot of them operated a wait and see kind of strategy, and you see what's working in the market and you're copying it. And for a lot of direct to consumer fintech, it's very easy for the banks for the incumbents to copy, and we have seen that. I think embedded finance is a very, very different model. And like I said at the beginning, if you don't have a complete organizational focus on it, then you are likely to find it very difficult to operate. Because
this is not about commoditizing something like it's been with a lot of the standard products where, all this competition from fintechs, and then the incumbents has commoditized a lot of the classic financial services offerings. Here, we're not talking about that.
No, we're not, because those building blocks have been commoditized already. A payment is a payment, and the customer doesn't care, what payment system it runs off. A payment runs on, as long as they know exactly when the recipient is going to get the money.
Yeah, but we still have opaque costs, right? In payments, right?
We do, but essentially, when I say it's commoditized, it means that all the banks and all the fintechs really offer the same building blocks. They're all run on the same payment infrastructure, whether that's the ACH in the US or faster payments. The consumers are used to that, and they expect, and they actually get a very similar service from most players. I think what we're talking about is repackaging and productizing those capabilities in a way that is both consumable by an intermediary and then distributed, as well as making that relevant and solving a specific need for that customer and their customers, and building that. And that's maybe the manual for those Lego blocks is going to be different, and it's different for the customer, and it's also writing it and operating it from the bank's perspective is very different to the manual that they have for their direct to consumer business.
Right. And Shaul, on your radar, on your universe of trying to understand what's going on in embedded finance, where the value can be helping non-financial players unlock this value, is it more in the developed markets where you suspect the opportunities are, rather than what we Westerners call emerging markets? Where is your heart?
I think the opportunity in emerging market is probably bigger, because in a lot of those markets, the digital services are kind of more advanced, or maybe not more advanced, but they've leaped, and there's not a lot of incumbent physical services to sort of remove, or behavior that relates to the physical infrastructure that needs to be removed. So I think there's this huge opportunity. However, the infrastructure isn't there yet. Whether that's regulatory framework, some cases it's the payments and the actual rails that are a little bit out of date, and also not available for everyone. So I think what we're going to see is probably more use cases in the developed countries. We see those quicker, but a larger opportunity for me is in those developing markets.
Perfect.
Because there are fewer incumbents potentially to remove, and the spread of digital services.
Let's see whether 2024 we do see some names that we can point to as being leading in this industry, because I assume for now there's nobody that you can really say, okay, I'm watching this provider. Is there any name that you're really watching?
No, not yet. I think there's a few new ones. I think worth mentioning, because they're built slightly differently, is probably Nexus and Audax from Standard Chartered in Asia, and because they're attacking their own sort of backyard markets, whether they're doing it in a way that I think is the most efficient, that's debatable, but they have a greenfield, many greenfields in front of them. The other ones I would look at is SEB Embedded in Sweden, and both Nexus and SEB Embedded have managed to bring a product to market with a very, very large retailer in different markets. I think it's too early to say how successful that is, but these are really interesting focus. They're not fintech, using embedded finance, and these are the ones that I'm on my watch list.
On your watch list. Shaul, thank you so much for this wonderful conversation. Before we close, can I ask you 2 personal questions?
Yes, of course.
One is, what are you reading? What movie have you watched? What are you enthusiastic about in that realm?
Well, no, I'm currently reading Chip War, and I can't remember the name of the author.
Doesn't matter. What is it about?
It is about the development of integrated circuits and microprocessors. So the whole history of how it started in the US, and the government support, and using of those microprocessors in war is the main driver, unfortunately, driven by a failure of a lot of ammunitions in Vietnam War, but by the US and the Cold War, all the way to these days, and the creation, I think, and that's where it becomes really, really interesting, the creation of a global supply chain for microprocessors and the political aspects of that. And I've been reading, and obviously a lot of those suppliers are in the Far East, and especially a very large one in Taiwan. And I've been reading a lot of history on Southeast Asia, mostly recent history in Southeast Asia, just because this is something that you don't learn about in schools here.
Yeah, 100%.
And it's fascinating, and we don't know. Growing up in Israel, and my kids here in the UK, we have absolutely no idea what happened in the last century in Southeast Asia, and I think that's it's not very good look on us.
Yeah, I mean, and whatever ideas we have are biases from media, right? From consumption from media, and not really from getting educated or reading other sources. So that's
and if we're building, sorry to interrupt, but if we're building a global network of fintech industries, and you mentioned my years in government, and I was focusing on creating those connections, you really have to understand the political and history, to understand why things are where they, how they are, and how to try and work within those constraints and environments in order to either overcome prejudice, overcome history and sensitivities, and just understand the people that you're speaking to.
Yeah, and if you wish to be diplomatic in whatever, business you're doing, you have to understand that it took me 20 years working to go back and say, oh my God, I mean, I got a finance PhD, and there was no lessons of history of financial markets, which of course include history of our history, really, because that's how it's shaped, but very little, right? When was the Federal Reserve set up, and why? Very, very basic things, and we all lack that, and I wish I had much more, because it would enable me to understand. I mean, Ray Dalio talks about it all the time, right? That unless you have a perspective of history and these patterns and social stuff, you don't understand, and we Westerners don't have that. Again, Shaul, thank you so much. It was a great pleasure speaking with you.
A pleasure to be here. Thanks for having me.